Google tax removed, but will India survive Trump's tariff war? Hello friends, one morning, when there was a stir in the business world of the country, a strange uneasiness was felt in the stock markets. People couldn't understand why the market was shaking so much. In a few hours, there was a news that shocked everyone. The central government had announced the removal of Google tax. This was the same tax that was levied to collect revenue from foreign companies in the digital age. But why did the government suddenly decide to end it? Has India succumbed to American pressure? Or is this some big strategy which is designed to save the country from the upcoming tariff war? The government says that this decision has been taken to bring ease of business and transparency in the tax system. But behind the curtain, another story was going on, which was related to America. US President Donald Trump has already warned that if any country imposes a digital tax on American tech companies, the US will impose counter-tariffs. This policy was supposed to be effective from 2nd April, and just before that, the Indian government decided to remove Google tax. Is this just a coincidence or a diplomatic ploy? Today we will discuss this topic in depth. But before that, if you are new to our channel, please don't forget to subscribe to the channel so that you will be the first to get our new video updates. So let's start today's discussion without any delay. The Google tax, formerly called the Equalisation Levy, was first implemented by the Indian government in 2016. The aim was to collect tax from foreign digital companies, especially companies like Google, Meta and Amazon, which make huge profits in India but evade the tax system here. Initially, it was only applicable to online ads, but in 2020, its scope was extended and it was applied to all e-commerce platforms. That is, if any foreign company provides digital services in India, then it had to pay this tax. But this tax has been around since the beginning of America. The US believed that India was only targeting US companies, causing a trade imbalance. The Donald Trump administration has called the tax discriminatory and likened it to a trade war. He openly said that if India does not remove this tax, the US will also impose heavy tariffs on Indian products. Due to this pressure, the Indian government has now decided to remove this tax. Finance Minister Nirmala Sitharaman introduced 59 amendments in the Finance Bill in Parliament, one of which was the removal of Google tax. It cannot be called a one-sided decision. Rather, it was a balanced decision taken at a sensitive juncture in India's relations. Tax experts say that this step is a right initiative in the direction of making the international tax system simple and equal. Deloitte India's tax expert Sumit Singhania said that this was a necessary step to move towards the OECD's two-pillar tax policy. Countries around the world have imposed digital taxes, but now it is the need of the hour to move towards a uniform tax structure at the global level. But the question is whether India took this decision only under pressure. Did India have to soften its own policy to avoid US tariff war? According to a report in the Times of India, tax consultant Amit Maheshwari believes that this is a strategy on India's part to show commercial flexibility, so that relations with partners like the US do not deteriorate. It is a kind of tax diplomacy, in which countries have to balance between their revenue interest and international relations. India would definitely get revenue from the Google tax, but if there was a clash with a major trading partner like the US, the loss would be much greater. Along with this decision, the government is trying to promote foreign investment and bring clarity in the tax rules. Several other important changes have been made in the Finance Bill. For example, now the word total income will be used instead of total undisclosed income. This will be used in cases that fall under tax evasion, possession of black money or search seizure. Earlier, the word total income used to lead to confusion that the legally declared income can also come under the scope of fine. Now it has been clarified that the penalty will be levied only on undeclared income. This change will instill confidence in the minds of taxpayers and may eliminate the fear of tax panic to some extent. Not only this, efforts are also being made to make the tax system more transparent through technical changes such as arrangement of faceless appeals in tax cases, automated scrutiny, and investigation through data analytics. India will now have to strike a balance on two fronts. First, trade relations with countries like the US, and second, the need to collect taxes from its own digital economy. Because now the whole world has gone digital, and in India companies like Google, Meta, Netflix are earning crores of rupees every day. If they are not taxed, it will be an unequal competition for Indian companies. But the solution to this problem is not only through taxes. For this, an international consensus and global tax system is needed. This is why the two-pillar system has been brought in by the OECD and the G20 countries, which will ensure that where companies are making profits, they also pay taxes. This decision of India is a positive sign in this direction. This shows that India is ready to join the global economic system. But with this, it is also important that India has a strong voice on global forums to protect its digital tax rights, so that the revenue of the country is not affected and foreign companies also become responsible. It will be interesting to see what reaction comes from the US side. Will Donald Trump now put a brake on his tariff war strategy? Or will he consider it as India's weakness and try to impose more conditions? Markets will also feel the impact of this decision. Indian businesses related to digital advertising will get relief, but the new question for the government will be that how will the revenue that came from this tax be compensated? Will there be a change in GST rates or a shift towards a new tax policy? One thing is clear in this whole development: tax system is no longer just a matter of revenue collection. It has become a part of diplomacy, global relations, and business policy. By removing the Google tax, India has given a silent but very effective message to the world that it is ready to move step by step with the world economy. Now is the time for India to further simplify its tax policy, monitor digital business revenues, and ensure that no company can evade taxes by making profits in India. At the same time, it is expected at the international level that the US will welcome this initiative and advance bilateral trade agreements. This is the beginning of a new tax diplomacy, where behind every policy lies not just money, but the entire foreign policy.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources: news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.